In today's episode, we're going to be covering the HIMS stock. HIMS may be sitting at one of the most important levels on the entire chart. Bulls are trying to reclaim key resistance while bears are attempting to force another rejection. The question is simple: is HIMS getting ready for a move back towards $40, or is a deeper correction coming first? Let's jump into the monthly chart here. Right now, the price of HIMS is at $26.74, and this chart is looking, I would say, a little bit bearish. Why? If we look, we were at an uptrend. We made it all the way up as high as $73 basically, and ever since then, now we're at a downtrend. Now, something that's good is that we recovered this 50 moving average, but we're hovering under the 21 moving average. In order to get bullish again, we would have to get back above this 21 moving average, which is at $35.81. I'm not liking these wicks. These are rejections that we haven't had the strength to get above this 21 moving average. Now, May, we closed kind of indecisively red. Let's see what June offers us this month. Now, the stochastics were low, but if we zoom in, we kind of see that we might start rolling over. If we roll over, what I'm afraid of is, could this end up being some type of a head and shoulder pattern? Left shoulder, this is a head, this is a right shoulder. This could bring us further down. Now, we need to keep the support above the 50 moving average at $20.89. As long as we could do that, then we could remain neutral to bullish and see if we could get above this 21 moving average. On the weekly time frame, the stochastics here are a little toppy. We could roll over here, or maybe we could possibly get one hump up before falling down. Now, we are above the 200 moving average. We are above the 21 moving average though, so this is looking a little bit more bullish here. Obviously, to keep on getting more bullish, we have to get above all these clusters of moving averages here. And as you can see here in the VRVP, we have a gap. So if we're able to get above this 100 moving average, we could kind of fly up back to about $45, but we need to get above these clusters here. Now, a pattern that I'm seeing here is that this could possibly be some type of a flag here that we're trying to break out of. Now, the measured move to this would take us to about $38, and this will be right where the cluster of moving averages are. So let's see if we get that one more hump up and we can make it up there. We head over to the 3-day chart. Again, looking a little bearish. This looks like it wants to roll over. The RSI got above the 50, but it looks like we're rolling over. If we lose this 50 on the RSI, we could see more downside, and we're still below the 200 moving average. I gotta say, that's still a little bit bearish for me. If we could get back above the 200 moving average, I'll feel a lot more confident in a higher move up sooner. Now, if this candle closes red here, this could be tweezer tops, and this could mean more downside. This could kind of be some type of a double top, and this could bring us down possibly to $20, or possibly even a little bit below that. On the daily time frame, stochastics again pointing down, the RSI pointing down. We're below the 200 moving average. That's bearish to me. Again, we close this candle red. This could be tweezer tops. We need a hold above this 21 moving average at $25.81 to remain bullish. If we lose this, our last resort here is this 80 moving average at $23. If not, we risk falling all the way down to this point of control at $15. The 4-hour time frame also looks like we're kind of rolling over here. This to me does look some type of a double top, one top, two tops. This measured move could bring us below the 200 moving average back to $21 here, and we are being rejected from the 21 moving average. So most importantly here, especially on the 4-hour time frame, is we want to stay above this 200 moving average at $23.44. If we lose this 200 moving average, this is going to open up the path to go to $20 or below. If we can stay above this 200 moving average, we could remain slightly neutral to bullish. Now, overall, I am kind of seeing like this could have been an inverted head and shoulder, left shoulder, head. This could be the right shoulder, but we cannot lose this 200 moving average. If that's the case, again, this could bring us up to $35 or above. So it's important to see what's going to end up happening. Let's see what happens when this stochastics RSI resets, and let's see if we can stay above this 200 moving average. On the 1-hour time frame, stochastics are getting low. This could still drag, but hopefully we could start rolling back up. Here you can see more prevalent the M pattern, one top, two tops, and we're losing this 100 moving average. This means that we might be headed towards this 200 moving average at $25.90. We don't want to lose this. We lose this, we could fall down to $23, and like I said, lower. And on the 15-minute time frame, stochastics are also rolling over, and unfortunately we did lose this 200 moving average and the 21 moving average. It kind of looks like we're bear flagging here. This also kind of looks like a descending triangle where we kind of have a flat bottom, and as you can see, we're starting to get lower highs here. This usually does break out. You know, this could end up going sideways here, tighten up, and then we fall down. and the measure move to this could bring us down below $25 to about $24.68. See, this kind of makes sense with the M pattern. So right now, guys, overall, I want to say I'm a little bit neutral, and I gotta lean a little bit more bearish for this HIMS stock. What would make me go bullish here, I would want to get above this 200 moving average on the daily time frame, which is at $33.57. If we cannot do that, it does look like we might be testing $25 to $20, and if we cannot hold the $20 level, it's possible that we could fall down all the way to $15. So short term, I'm leaning a little bit more bearish with the double tops that I'm showing you here, but overall, we do have the potential to hit $35 or $40, but we need to get above this 200 moving average on the daily time frame. All right, guys, so that's the breakdown. If this gave you clarity or you set up to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.